to all the participants on this call. Welcome to the Q3FY18 results earning call of GMM Pfaudler Ltd. Please note that we have mailed the results and the press release, and the same are also available on the company's website. In case you have not received the same, you can write to us and we'll be happy to send the same over to you. To take us through the results and answer your questions today, we have Mr. Tarak Patel, Managing Director, GMM Pfaudler, Mr. Ashok Pillai, COO, and Mr. Jugal Sahu, CFO. We'll start the call with a brief overview of the quarter gone by, and then we'll get into the financials, which will then be followed by the Q&A session. I would like to remind you that anything that is said on this call and any outlook for the future, which can be construed as a forward-looking statement, must be viewed in conjunction with the risks and uncertainties that we face. These risks are included and are not limited to what we mentioned in the prospectus filed with SEBI, which you can find on our website. With that said, I'll now turn over the call to Mr. Tarak Patel. Over to you, sir.
Thank you, Binay. Good afternoon, friends. Just wanted to take you through Q3FY18. So let me start off by saying that we had another strong quarter. We are on track to meet our revenue as well as profitability budgets for the year. Compared to the same quarter previous year, we grew our revenue by about 19%. So this quarter we had a revenue of 79.2 crores versus 66.6 crores Q3 last year. On a 9-month basis, we grew our revenue by 20%, 224 crores versus 186 crores the last 9 months. Our EBITDA has also increased by 16% year on year, which is 12.3 crores versus 10.6 crores previous quarter, same period last year. And on a 9-month basis, it has increased by 6%. 31.8 crores versus 30.1 crores. On a profit after tax level, we have increased 19% year on year, 7.4 crores versus 6.2 crores. And on a year-till-date basis, by 6%, we have increased 19.9 crores versus 18.7 crores. In terms of backlog, we do have a very healthy and strong backlog. It is higher than the same period last year, which puts us into a good position to end this year at, and also for Q1 and Q2 of next year. The major investments that we are seeing are basically in agrochemical and specialty chemical industries, and we do expect pharmaceuticals to also pick up in the coming months. So all around, we are quite encouraged by the signs that we are seeing, and we believe we can continue our growth trajectory for the next financial year as well. Thank you.
Sure, thank you very much. We will now begin with the question and answer session. Participants who wish to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Dhruv Bhatia from AUM Advisors. Please go ahead.
Hello.
Yes, go ahead.
I have a question about the order book that you were mentioning. How long do you think the order book covers you for sales at the current rate?
So I think, we don't really share the information, but the first 2 quarters, we are quite confident that we can meet the first 2 quarter targets for the year. Obviously, it's not all fully booked, but the first 2 quarters, we have at least some visibility into that.
Okay. This is at the same level of utilization as last year, or do you expect to see high utilization?
So we do expect increase coming in terms of production, in terms of the efficiencies coming out of the glass line factory as well. And even with NGL, we believe that, yes, we will be utilizing the factory at a slightly higher rate.
Okay. Do you give any numbers expected at all, or do you say better utilization?
would not be able to comment right now, but we wanted this year to increase our glass line output from 1,400 to about 1,800 units. We are changing the way we calculate units, so it would be a little premature for me to tell you exactly how much more, but definitely a 20 to 35% increase in production over the coming quarters.
Would be good in the future if it's possible to get some more granularity on,
Right. So I think for next year, this financial year, we do plan to have a little bit more transparency when it comes to the backlog numbers as well as the order book numbers. We can probably share that with you in more detail starting the first quarter of the next financial year.
Okay. The next question was on your pricing. How do you price typically? When you say you have an order book, is there a fixed price? And do you book the raw materials now, or you buy the raw materials and pass it through? And do you book a fixed, margin over cost, or how do you do it? Because you don't seem to have that much competition. So how does the whole pricing play out, and how do you see that going over the next maybe 12 to 18 months?
Well, the contracts that we get are all typically a fixed price for the duration of the contract itself. So for glass and equipment, we typically have steel. We have it in stock with us, typically 1 or 2 quarters in advance. So sometimes that is a disadvantage because it affects us from a pricing point of view. Sometimes it is an advantage. But most of the times we can pass on the cost increases that happen on steel to the customers.
Does that work both ways? In the sense, if you have had a benefit of falling prices, which may have been a bit in the past, I guess, but have you benefited from extra profits, or is it kind of only for price increases? So you basically get a benefit of profitability when the prices go down.
Yes, some time ago when the prices of steel had dropped, that time we did get a benefit of the falling price, but for a short time, because the customers are quick to seize on that aspect of falling steel to ask us for discounts. So that is about glass line, whereas for the non-glass line business, it is typically based on the prices that are prevailing in the market and quoted on that basis. So that is really passed on fully to the customer.
So basically, when you book the when you book the order, you have a fixed price, and unless steel prices increase, everything else is on your account for execution. Is that?
So let me just clarify here 2 points. One is that for our glass line business, which is our standard product, and we make lots of those similar equipment. In that business, we really can't pass on any price increase or decrease to the customer. What we do, we work on a price list, and the price list itself is quite dynamic, so any increase or decrease in metal prices get reflected on the price list. However, for the larger contract, for the non-glass line business, which is based on much more material input as well as much longer term, there we have escalation clauses that if the prices increase more than a certain amount or decrease, the customer can get the benefit or the might not.
Okay. Do you have a policy to book once you get the order at all steel so that you're locked in, or basically you go with your call on where you think the prices are going to be in the next?
So for glass line, of course, we have steel in stock because we typically order at least 1 quarter, sometimes 2 quarters requirement ahead of the planned quarter. But for the non-glass line, it's typically against the orders. We do carry some stock based on our understanding of where the market is for typical material like stainless steel. But otherwise, if it's a large contract, we would book against a particular order.
Any input on the subsidiaries performance? Any update on that possible to get?
Yeah, so subsidiaries, we don't share quarterly numbers, but I can add and just let you know that it's on track in terms of what we had projected, and will probably be very close to meeting the budgets for the year.
Last question, if I may, where do you see the demand outlook from your big industry, big customer industries?
So the demand right now is a bit shocking in terms of what's going on in the market. We really have a very large, healthy backlog, sizes and quantities that we have not seen before. So there's a lot of investment coming into both the agrochemical and the spec chem industries, back-to-back, very large the projects. And from what we see, there are big major projects in the pipeline as well. And this is all without pharmaceuticals really picking up. So once that picks up, it's going to be, there's going to be a lot of business for not only us, but for our competitors as well.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Anupam Goswami from Stewart and Mackintosh. Please go ahead.
Hello. Yeah, congratulations on the good segment number. I just wanted to ask, last concall and also before that, you mentioned that the target is to produce 1,800 vessels in FY18 and from 1,400, which was in FY17. I just wanted to know how that target is coming up.
So we are on target to meet those numbers. We will be crossing 1,800. So as per our plan, we have increased production, and over the next few months, we'll see that increasing even further. We have a new furnace that will be commissioned shortly by the end of this month, so that will also help us increase our capacity and our output.
Okay. And another thing is like, how do you see the growth prospect in each of your segment, as in the glass line and heavy engineering and also proprietary products? In each of these segments, how do you see the demand coming up in this?
So like Tarak mentioned a little while ago, there is a very strong demand pull for glass line equipment in the agrochemical and the specialty chemical space. And we expect that even the pharma sector is also going to be strong in FY19. That's for the glass line equipment. In the non-glass line, we are still, in terms of market share, very small. So that potential is large, and that is going to be a good growth segment for us in the years to come.
Okay. And sir, you mentioned you will be focusing on heavy engineering segment, and because that portion is quite small and there is a lot of scope in that. How is that also coming up?
Like I said, both domestic sales as well as export sales of heavy engineering through Pfaudler is really, we're looking forward to that happening in bigger numbers for the next year or the next years to come. So we are very, very upbeat about that potential as well.
Okay. And sir, any capex plans that is going on right now?
Most of the capex that we had planned for has been done for the year. So there's no significant capex that we have planned right now except for the regular maintenance capex.
Okay. And what till now, like for this year, what is the capex amount?
15 crores.
15 crores. Okay. And sir, what is your the order from parent company from the Pfaudler? Any new orders that is coming up or in the next years?
So they will be having a sales meeting shortly where they will consolidate their requirements, and they will get back to us probably in the next couple of months in terms of what their requirements are. But it's definitely something that they want to continue doing because it helps them grow market share in Europe, and it also helps GMM. So it's a win-win situation for both of us. So that's something that will continue. The exact quantity of the next order I can't tell you right now, but I think it will be slightly bigger than what they have placed in the past.
Okay, sir. Thank you, sir. That's all.
Thank you.
Thank you. The next question is from the line of Rohit Chawla from Axis Securities. Please go ahead.
Thank you for the opportunity. Firstly, congratulations for a good set of numbers, sir. Yeah, so some of my questions have been answered. So I just want to ask that we had hired a consultant to increase the capacity. So has the capacity increased to 2,000 vessels now?
So it's not immediate, but it will happen over the next few months. So the team is still continuing to work, and there is some debottlenecking that's going on. There is some expansion in terms of just clearing space so that our manufacturing process itself is, much more efficient. But yes, there has been a significant increase, but over the coming months, you'll see that increasing as well.
Okay, fine. How much capacity utilization are we operating at in the glass line business?
So I think currently we would be at about 80% utilization, and we'll try and bring that up to maybe 90-95 in the next few months.
Okay, in the next few months itself. So this would include the increase in capacity also, and of that the utilization will be 90-95.
Yeah.
Okay, fine. So this quarter we witnessed almost a flattish growth for glass line. However, our proprietary products increased by almost 40%. So what can be attributed to such a high increase in proprietary products, and do we expect the same trend going forward?
Yeah, so no, the trends will keep changing. However, this quarter, I mean, I've mentioned this before, our non-glass line businesses will grow faster than our glass line business, right, because our glass line business, we have a market share of 50-60%. Right. It's a saturated market, but the recent demand that we are seeing in glass line itself is surprising us, because right now in terms of our order book, our biggest chunk of our order book is with the glass line business. So that's also showing not only an increase in terms of investment, but also the total market itself is growing in the glass line business as well. Having said that, both the proprietary product and heavy engineering are growth areas for us. We will continue to see significant growth on those businesses. And again, there we have seen some proprietary orders coming in through the Pfaudler network, export orders, good margin, high value orders, so that's also helping us.
Okay, so this is the expected orders you are saying are from Pfaudler network?
Yeah, some of these export orders for the proprietary products have come through the Pfaudler network, and even some of the shipment that we did this quarter were for international orders that gave us the additional revenue increase. Okay.
So how much of our revenues were from exports? 5%, 10%?
No, I think this quarter, it was up to about 15%, which is about 14-15%, which is much larger than our normal export numbers. And we see that trend to at least continue, because there is a lot of interaction between Pfaudler and GMM. And it is also quite, for the new Pfaudler team internationally, GMM Pfaudler is quite an attractive option to meet customers' requirements where a European-made equipment cannot suffice the needs.
Okay, fine. And how much of our revenues come from the pharmaceutical sector? So as you said, we are seeing good investments in agro and specialty. So that is picking up. So how much of our revenues are dependent on the pharmaceutical sector? Because if that also picks up, then we may see a huge upside in our order book as well.
Right. So I think pharma this quarter in terms of revenue was about 30%.
Okay.
And for the 9 months, about 40%. But the recent investment, a lot of going forward, we believe that when we discuss revenues, you'll see a big change there, because a lot of the growth and a lot of the investment, a lot of the orders that we have are now from the agrochem and specialty chem industries. But having said that, pharma, what we are hearing in the market will start to pick up as well. There are big projects coming in the pharmaceutical sectors as well. So over the next 6 to 9 months, we'll see some amount of investments coming from pharma as well.
Okay. And lastly, is our vision like we'll be doing 50-50 from glass line on glass line by 2020? Would that shape up, or we would see a major contribution from glass line itself?
So I think we are right now at about 60-40.
Right.
It will fluctuate depending on what the market throws at us. Obviously, the glass line is our most profitable business.
Right.
It is also what we are good at, so we'll try and extract as much business from there. At the same time, we will not let go of heavy engineering and proprietary products.
Okay, fine. Thank you so much.
Thank you.
Thank you. The next question is from the line of Sarvanan Vishwanathan from Unifi Capital. Please go ahead.
Thanks for taking my question. Congrats on a good set of numbers, sir. From our standalone numbers, revenues, is there any supply to Mavag?
There will be some intercompany sales to Mavag. Is counted in the standalone numbers? Yes, there is.
Okay, so to what extent would that be?
I would not know offhand. It would be for this quarter in the single digit crores, so maybe 3-4 crores or maybe even lower than that.
Okay. So over a longer term, the strategy is to do more of Mavag's products here, and Mavag just does the marketing there, right? Is that the strategy?
The strategy is, so we do the most of the manufacturing here, but the finishing, the testing, the final assembly, the customer acceptance test will all be done in Switzerland. So they get, best of both worlds. They get the low cost of India, but they get the finish and the quality levels of Switzerland. So
in which phase are we in this transition? Have we moved fully, or have we started?
No, we have definitely started. I would not say that we're 100% there. There are still issues in the supply chain. There are the issues with our manufacturing as well as a lot of changes that happen during the entire manufacturing process. I would say we are about 70% there, something that we can definitely try and improve. But, having said that, Mavag, the only reason why it's surviving today and why it has grown over the last 5 years is because they've had an option of sourcing from India, without which they probably would not be in a position that they are today.
Okay. And so they have, I presume going by your commentary, they're although you'll be disclosing the numbers in the annual review, so they're on target to do something better than what they have done last year.
Yes.
Okay. And when will be the next stage of capacity expansion that will be required? Next financial year or year after? In the glass lining equipment business?
In the glass line equipment business, there is always some improvements that we are trying to make here and there, but no major capex. We have some thoughts in terms of what we would like to do, but that's probably something that's maybe 6 months to a year away. But we do have some plans in terms of how we can grow the glass line business as well.
Okay. And do you see any risk emerging from volatile metal prices?
There is, that will of course impact profitability, and that, so that has happened, and, that's something that we will plan for and expect to happen, both in the non-glass line as well as the glass line space. But that's part of the business, and we're not, overly worried about that.
But just to add to this, right now the market is such because the demand is there and the capacity is obviously limited. It's more of a seller's market where you can command the pricing that you want. People are out, and especially with agrochem and specialty chem, they tend to have much more corrosive, much more critical reactions. So they definitely prefer vendors that are, have a proven track record, have a quality level, as well as have some amount of, that they have experience with. And they're much larger sizes. So all these account, and they, the customers would like to de-risk a lot of their purchases and go with vendors like GMM.
Okay. Many pharma companies have been affected by FDA, various irregularities pointed out during the FDA inspections. Taking that into account, are they now moving to more branded or well-reputed players? Is that happening, or it'll take some time?
So there is there are actually cases where customers who were buying from other suppliers over the last maybe 7-10 years have decided that the money so-called saved in that purchase, buying from a lower cost supplier, was not really worth it, because the problems that had come up through FDA audits were such that the cost of the equipment was insignificant compared to the loss that they had to bear. Yeah. Some companies actually told us that we want you to be the sole supplier. All you have to make sure is that you give us fair prices and make sure that we get delivery on time. So that shift seems to be happening, and people are realizing that going with a company with the track record that we have is overall for them beneficial in the long term.
Okay. And in the mixing and filtration equipments space, are you seeing any players who have gone out of business post GST? I mean, any unorganized players have gone out, or the competition is still intense there?
So in the mixing space, we are the largest organized sector mixing manufacturer in India.
Yeah.
The unorganized sector is so large and so dispersed throughout the country that we really have no track of how many suppliers there are and what they are doing. So as the fortunes of the particular location where they're located changes, and with the GST and other economic conditions, they may have faded away. But we're not keeping track of them, nor do we know what's happened to them. In the filtration and drying, again, we are seeing that people who are buying from the unbranded and the local manufacturers, who are actually local to their manufacturing facility, those sort of purchases seem to be now going down, and the customers seem to be now looking for branded products. There, we are not the number one from compared to glass-lined, but we can definitely see an upswing in the requirement and the demand for our products.
Thank you. The next question is from the line of Ashwin Reddy from Samatva Investments. Please go ahead.
Yeah, hi. Thank you for the opportunity. I just had a couple of questions relating to the glass-lined business. So one, if you can just talk about the competition in the glass-lined business, and does it change when it comes to the agrochemical and specialty chemical business versus the pharma business?
So the pharma business typically has less severe conditions from the temperature point of view, from the corrosion point of view. So from that point of view, it's a relatively easier process to handle from a glass-lined equipment. So there is one school of thought that says, any equipment, therefore, of some of the other competitors may also work. But like I pointed out in my earlier response, many of the customers who took that approach have realized after some time that the so-called savings is not worth it. So that is one point on the pharma sector and glass-lined equipment for that. In the case of glass-lined equipment for the agrochemicals, where the reactions are very severe, their customers would prefer to go in for GMM because they are more assured of the longevity of the equipment itself and also from a safety point of view.
Got it. So, just if I put this statement together with the previous statement on the capacity utilization approaching 90% plus in a few months, I mean, if I heard that correctly, and if the demand for agrochemical and specialty chemicals you see is and you use the word shocking. I mean that caught my attention. So the demand is so good, and here if you are a leader and where if it's your strength, I mean, would you be increasing capacities here and building on its strength, or because again you mentioned that you'll not be increasing capacities also, right? So I'm trying to correlate the two statements and figure out why.
So we think that we can, we are probably 90% of the capacity already. But we believe that we don't need to invest in capacity right now as it stands. But whatever plans we have, it's too premature to talk about that in concrete terms. But whatever it is, it will actually unfold itself in the next 8 to 10 months or 8 to 12 months time.
Okay, but the general trend of the agrochemical specialty chemical companies investing in capacities, I mean, is it here to stay for next 1 to 3 years, or do you think it's like a one-time blip which is happening and it might fade away soon? And is that a reason? So,
well, all this expansion is happening with maybe 4 or 5 companies that are really putting up capacity. It's partly fueled by the demand and partly fueled by the fact that China has issues of supply. So, right. As long as that continues, I think the growth for these sectors will also be strong.
Fine. And last question on my side, which is there a strong services component in your glass-lined business, or is it only a product business only? Do you sell it and then you only sell it? And what is the life of a product that you sell to each company? Is it like replaceable in some years, or how does that work?
So the typical life of the equipment is between 7 to 10 years.
Okay.
Some customers look after it well, so that there's an extended period of life, in which case there is a certain amount of aftermarket business that we get. Some customers use it very roughly. They don't look after it well, in which case there's very little aftermarket business, but the equipment itself, dies away in maybe 5 years, and they need to look for replacement.
Okay. Thank you so much.
Thank you. The next question is from the line of Kashyap Zaveri from Emkay Global. Please go ahead.
Hello.
Yes, go ahead.
Yeah, hi. Thank you for the opportunity. Two questions. I'm not sure. I joined the call a little late, so in case we have given the order book number, if you could repeat that. And question number 2 is that in the segmental, now under new format we give gross sales for the same quarter last year, but net sales for this quarter. So if you can give comparable number for the same quarter last year in terms of net sales.
Right. So I'll answer your second question first. So it was 79.2 crores in this quarter net sales.
Right.
Versus 66.6 crores previous quarter last year.
Right.
Right? So Q3 of FY17.
Right.
Which is a growth of about 19%.
Okay. So I have that number. I wanted between glass lining, engineering and proprietary, if you could break up 66.6 crores.
Yeah, that is about glass line 40 crores.
Okay.
And heavy engineering 12 crores.
Okay.
Proprietary product 14 crores.
Okay. Yeah. Okay. Then the second question. Yeah. Thank you very much. So on the second question about the order book.
So order book, yes, we actually mentioned that we have a very strong, very healthy order book, much higher than what we had at the same time last year. However, in terms of actual numbers, we don't disclose right now. And what we are saying is that we have visibility for Q1 and Q2 of next year.
Okay. Okay. And in terms of EBIT margins for, engineering and proprietary, now for about 3 quarters, they have remained pretty stable at about 9% or 9% plus. And for proprietary, now it has improved to almost about 9%. These numbers for the quarter are sustainable going forward?
Yes, I think they're sustainable. I think you'll see a bit of improvement as well.
Okay.
As we get some more export business, as well as, as we absorb the fixed costs and we grow the businesses to the level we want to, you'll see some improvement in that.
Sure. Thank you very much, sir. Thank you.
Thank you.
Thank you. Next question is from the line of Aditya Deora from Divisha Investments. Please go ahead.
Good afternoon, sir.
Good afternoon.
Sir, any update on the switch to gas-based furnace?
Switch to? Gas-based.
Gas-based furnace.
So most of our furnaces are already gas-based. We were installing and in the process of commissioning a new gas furnace. So that is under commissioning now. It should be commissioned in the next couple of weeks.
Okay, and we expect some improvement in EBITDA margins because of the same?
Yeah, so gas is definitely more economical than electric, and if we can ship out all the additional output that we do only through gas, yes, there will be definitely a good amount of cost saving on that front.
Okay. So how much royalty are we paying to Pfaudler right now?
1% of sales.
It's not a royalty. It's more of a trademark agreement that we have. It's 1% of glass line sales.
Okay. Like last year, if I'm not wrong, it was 1.5 crores that was mentioned in the annual report. And so we have a line item in the annual report which mentioned that there was a loan given to Pfaudler GmbH which amounted to something like 9 crore rupees. Has it been repaid?
Yes, I believe that has been repaid. That was just a short-term loan given by Mawar, which is our subsidiary to Pfaudler GmbH.
Okay, and sir, how much cash we are having in our balance sheet right now, combined?
Combined cash will be around 80 crores.
Okay, sir. Thank you.
Thank you. Before we take the next question, we'd like to remind participants that you may press star and 1 to join the question queue. Next question is from Mr. Dhruv Bhatia from AUM Advisors. Please go ahead.
Thanks again. Question was regarding, the parent, the foreign company in Germany. Are you seeing any change in the business in terms of them procuring or trying to procure more, products from your end at all with an export angle? I'm talking of apart from the subsidiary exports, or in terms of technology transfer for any new designs into the Indian company on the basis of royalty or any other kind of change dynamics with the parent where you can see growth for the Indian company?
Yeah, so I don't know how long you followed GMM, but our parent has changed hands.
Right, I'm aware of that.
3 years ago to private equity, and they brought in a whole set of new people. there is definitely more interaction between GMM and Pfaudler International. There is sourcing opportunities. We've recently completed our second supply for glass line equipment to Pfaudler. We regularly supply other equipment, non-glass equipment as well to Pfaudler. We got recently an order which we are really close to already shipping is for heavy engineering order from Pfaudler Germany as well. We've got some orders from their subsidiary in China. So there is a lot of interaction. There is a lot of working closely together, and I believe that going forward that can only improve. And it's a win-win situation for both because we both end up making a good amount of money for both for Europe as well as for India.
The question was more, is there any significant trend that you expect that to become much more meaningful, or these are still more of, kind of one-offs? Do you expect that to be a large part of your revenue going forward or something like that?
I would not say large part, but I would say that maybe in the next couple of years, about $10 million worth of intercompany cooperation, orders coming back and forth. That's something that's kind of achievable. So it's not small, but in terms of, it's not significant in terms of they will not shut down their factories in Europe and move everything to India. No, that won't happen overnight.
Okay. Thank you.
Thank you. Before we take the next question, a reminder once again to our participants that you may press star and 1 to join the question queue. Next, we have a follow-up from the line of Mr. Kashyap Javeri from MK Global.
Thank you for the opportunity again. Again, 2 questions on our, segmental results. Unallocable expenses, have been quite erratic across the quarter. So let's say if in the same quarter last year they were roughly about 2 crores, now again 1.2. If I look at the preceding quarter, that was about 2.3 crores. If I look at it as a percentage of our EBIT, that's a fairly large, about 20% number. So what sort of expenses would be attributable here?
See, actually our segment that we have introduced this new 3 segments this year. So accordingly, whatever expenses that can be allocable to individual segments, that we do. Therefore, exactly I cannot tell you what are the expenses that were considered as unallocable. But this is a result of after allocating individual expenses, whatever is not allocable to individual product lines, they are being captured over there. So the difference is, if you look at the amount terms, the difference is not much. It's about 1 crore, 70 lakhs, 80 lakhs.
Right. I was just wondering because, if I look at it as a percentage of the EBIT number, which is about 10-11 crores, that's about almost like 10%. I mean, of course, 1.2 crores is a small number.
Yeah.
But if I look at it as a percentage, that's quite a decent number. Anyways, on question number 2, again on the segmental side, we have about 80 crores of, unallocable, assets also, which is about a third of the total assets employed. What would that include?
These are basically office building and our corporate office, all fixed assets that are available, that are there.
Okay, so that would be only part of this.
Correct.
Okay. Thank you very much, sir.
Thank you. Participants who wish to ask questions can press star and 1 at this time. We have the next question from the line of Rahul Jagwani from SKS Capital.
Hi. Considering we have a good cash balance, are we looking at any inorganic opportunities?
Yes, we are always looking at inorganic opportunities. We do want to add at least another 100 crores of revenue through inorganic growth. However, we are not close and we've not been able to find the right acquisition target. But we are always open to looking at that.
Okay. And the second question is, considering your strong comments on the demand outlook, so do you see probably revenue growth accelerating to 30% or something in FY19?
So I can't put a number to it, but we definitely want to be a little bit more aggressive this year. So definitely want to grow at a higher rate than we are growing in this financial year. maybe pump that up by another 5 to 10%.
Okay. And any number from how much we'll save by moving to this gas-based furnace, this new commissioning one?
Don't have an exact number, but the normal rule of thumb is that the electric furnace costs you about half of what an electric furnace would.
Okay.
So it depends. If we move all the output, additional output, if we don't use the electric furnaces at all, then we can see some significant savings. Obviously, we only have maybe half of February and full of March to realize that, but Q1, Q2 of next year will definitely see some savings.
Okay. Cool. Thanks.
Thank you.
Yeah.
Thank you very much. That was the last question in queue. I would now like to hand the conference back to the management for closing comments.
So thank you, everybody, and thank you for your questions. And if you have anything specific that you would like to discuss, you can get in touch with with Christensen as well, or with our CFO. And look forward to talking to you again next quarter. Thank you very much.
Thank you.